Like seeing a long-lost brother and friend, Tom Piotrowski, I'm pleased to say, is back for this week. It's beautiful to see your smiling face, Tom. Everything okay?
Oh, Pete, yes, it's well. I suppose in terms of what we're talking about this morning in the market, it's quite an historic day. It's easy to use cliches and hyperbole, and this is a moment where they really do apply, because we've seen the most extraordinary turnaround for US markets over the course of the last couple of hours. And at the end of the session, the S&P 500 up by 9.5%. The Nasdaq rose by a little over 12%, and the Dow Jones was up by just short of 8%. So that's all happened over the course of the last 4 or so hours, and the catalyst was a statement made by the Trump administration saying that they would be pausing reciprocal tariffs on a range of trading partners for a period of 90 days. Although in the same breath, the tariffs applied to Chinese imports rose to 125%. And Mr. Trump said that there'd be specific exemptions examined for US companies. So all of that translated to an extraordinary turnaround for US equity markets. At one stage, they were in negative territory. So the range of the turnaround has led to some quite historic statistics being tabled. It was the third largest one-day gain for the S&P 500 since World War II. It's the sixth biggest low to high turnaround for the S&P 500 since the global financial crisis. So the volatility is neck-wrenching, to say the least. And arguably the catalyst, Pete, was at one stage you saw interest rate markets selling off quite aggressively, and the discussion around the potential for the central bank, the Fed, having to step in to stabilise things may have been a factor that contributed to the Trump administration coming out with those statements. Nonetheless, we are left with a pretty happy circumstance for this morning, at least. The futures are pointing to a gain of 6.2% for the ASX 200 when trade gets underway. You don't get to say those sorts of numbers very often.
It's absolutely incredible.
It's a question of what happens from here, really,
can I just ask,
at
Tom,
this stage is difficult to say.
So over the past week or so, it's come off, what, 12, 13% roughly on the American markets. Now, if it's up 9% today, are we almost even? After all of that, are we almost back to even from where we were a week ago?
No, not quite yet. We need there's a little bit more wood to chop on that front. But really, what you want to see, Pete, under these circumstances, you don't necessarily want to see that rapid recovery. You want some stability to start creeping into an environment that has had an absence of that. So to that end, the VIX, which is a measure of the level of insurance, for example, that traders are taking out against bad outcomes, that measure fell from above 50 to just above 30. So a number below 20 is more normal. So you kind of want to see those things stabilise. You want to see that bond market stabilise. You want to see the currencies stabilise as well, because it's very fluid at the moment, and that volatility is arguably more damaging than the scale of the moves to some extent, because it means that the confidence for the marginal investor to step back into the market is limited under those circumstances.
I wonder what this does to all these claims of 5 rate cuts now for the rest of the year forecasts anyway, but I'll have to leave it there, Tom.